All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about KLIP and KWEB because KWEB went on a pretty incredible run in the past month. Yes, I would call it super because they went from roughly a $25 ETF to a $35 ETF. I don't even know what that gain is. We're going to do 25 divided by 35. Let's find that difference right now. We're going to subtract it by 1. That is a 28% gain. And what I want to talk about in this video is KLIP's gain, why exactly that happened, because it had some underlying stocks which performed very well, why KLIP actually wasn't able to fully capture this gain. And I want to talk about that. I have a couple articles up here which are going to explain why KLIP has differed so much in terms of a percent return from KWEB and what I'm going to be doing with my KLIP shares because I currently have 211 shares. Maybe you're invested in KLIP. Maybe you're looking to get invested in KLIP because they pay a 40% dividend. And I'm going to tell you exactly what I'm doing in my shares and what I think is going to happen because it might be a little bit for the worst. So that's what I want to talk about in this video. If you guys do enjoy, we're up to 5,505 subscribers, 93 subscribers in the past 28 days. Thank you to everyone who made this possible. 1 out of 10. We love 1 out of 10s on this channel. Our last video on YMAX is doing incredible. Thank you very much. Like and subscribe if you guys want to see more high dividend yielding content. So cool. Another thing, we surpassed $15,000 in my CIBC portfolio. That is another huge milestone. We had one the other day in our trading Questrade portfolio, and now we have one in our CIBC. And by the way, for Questrade, go ahead and use my referral code that will be in the description of this video. You'll get $50. I'll get $50. It's a win-win scenario if you're looking to get a new account on Questrade. Anyways, we're talking about KWEB and we're talking about KLIP. So KWEB holds some of the major kind of tech stocks and internet stocks within China. And just to kind of give you an overview of what KWEB is the Chinese Internet Sector ETF. You can see here that their main holdings, what I did was basically looked for the percentage of their holdings because certain ones did really well recently, which JD.com, Meituan, Tencent, Alibaba. You can see that their percent of net asset is significantly more than a bunch of these other ones, meaning that they had significant increases because KWEB looks to balance across their top 10 holdings, but because of these increases, they have now become bigger weights. Looking at them, what have they done? I mentioned that Alibaba was on the break at $88 for a potential kind of breakout here. You could see once it hit $88, it just jumped it, had a little bit of a position of doubt within most of the buyers' minds, but then shot right back up and over to $105. That is a huge move from Alibaba, considering it's a $254 billion company. And you can see here as well, one big driver of the massive uptrend in KWEB was Tencent Holdings. And you can see here as well, kind of was sitting about this $50 marker and had a really good breakout here up to $55. Not the craziest, but really Alibaba was a huge hitter in this. And KWEB, we mentioned, it went from roughly a $25 stock all the way up to a $34 stock. Well, look, KLIP sells covered calls on KWEB. So why did KLIP not see the full extent of this gain in KWEB? This is a 30% gain right here. And KLIP, you could see here, it went from roughly a $12 stock to a $12.72 stock. What is that difference there? I want to do that right now. 12 divided by 12.72. Boom, we're going to subtract to 100. That's only a 6% gain, 6% gain. So what's going on here? Why are they so uncorrelated? Well, I did some research and look, during a period of price appreciation for KWEB's share price may exceed the option strike price. The shares will be called away. When this occurs, any appreciation above the strike price will not be realized. What I'm thinking happened for KLIP was when they wrote the the cover calls for KWEB for this month, they did not obviously anticipate this huge growth. What I assume is that they looked at the previous track record of KWEB and said, look, maybe the price might appreciate back up to levels about $28, something like that. So I assume the strike price was probably about $26 to $28. And then when KWEB had this massive run up from $27 all the way up to $34, none of this was realized by KLIP. And this is kind of one of the risks that we undertake when we use a covered call strategy, because that's what KLIP does, a covered call strategy. They set their strike price too low and KWEB skyrocketed above that. KLIP was unable to realize any of that gain. Now, what does this mean? This means that KWEB is now sitting at a pretty decently high price, $34, and KLIP's price has not really jumped up and has not recovered to that 34, that correlation between KWEB and KLIP. So what does this mean? This means that when KWEB falls, KLIP is going to take all of that fall. If KWEB, and listen to me very carefully, if KWEB falls back 30% to where it was before, roughly $25, KLIP is going to fall by 30%. Now, I understand, look, you look at the day-to-day, their percentage gains are not directly, they are correlated, but they're not the same. 0.27%, 0.08%. They're not the same. But if KWEB has big downturns, I'm expecting big downturns as well in KLIP. So what does this mean for my position? This means that I might look to potentially trim my position, because sure, KLIP had a decent rise, but if I do think that KWEB might fall a little bit and get back to its normal levels, about $25 or so, then I'm going to look to probably sell off of KLIP and then reinvest when the price gets lower. But it's not always true. KWEB is going on a little bit of a run here. This $34 marker is not somewhere where we haven't seen for KWEB in the past. We've seen prices as high as $80, but for KLIP, we don't want to take all of the loss if KWEB goes down. Who knows? When looking at Alibaba and when looking at Tencent, obviously they had really good run-ups over the past little while, but are those run-ups here to stay, or will they slowly fall back down? That's something that we don't know as investors and we have to prepare for, which might be looking to trim our KLIP position. KLIP currently, they actually released their dividend, their latest dividend coming in at 39 cents. So a little jump up from the previous month. And you can see here, as the stock price gets higher, the dividends are going to be greater. And that's just because, look, they're going to pay out between a 3 and 4% monthly distribution rate based on their current stock price. But even with a less percent here, as you could see here, they are still paying out a higher dividend. So that's something to kind of keep in mind. So this was just a short little video to talk about KWEB and KLIP and to kind of go over why exactly KLIP's price didn't fully kind of take all of the upside that was presented by KWEB. It's most likely because their strike price was set too low and they weren't able to realize any of that gain from KWEB. So what does this mean now? This means that if KWEB falls, KLIP is most likely to fall. And I just wanted to kind of show you what was the reason for the gain in KWEB. It was Alibaba and Tencent and a couple other holdings as well, which significantly skyrocketed in terms of their evaluations, jumping about 30% in certain cases. Meituan as well and JD.com as well, you could see here in their total net assets. So if you guys did enjoy this video, please do remember to subscribe. We're up to 5,505 subscribers. I will do my best to keep you posted with anything KLIP. Of course, I have a decent sizable amount in terms of my shares, about $3,500 invested. So it's not one that I'm going to overlook. I'm going to look to keep you guys posted. I hope to see you guys in the next video, and I hope you guys do take care. Hopefully we got some good news coming up. I'll see you then.